Hi everybody, hope you had a great Thanksgiving. Coulter Brown here from the Northern Ag Network with our livestock market update. Well, the cattle market is leaving us plenty to scratch our heads over and get a little frustrated about. This is the fifth year of cow herd contraction, but feedlot inventories are increasing and that's put pressure on the futures market. Today we're going to talk about the disappointing performance in the last month of the futures. We'll look at the cattle on feed report and how calf and lamb markets are performing in the late fall. Talk about some of these fall bull sales and get a beat on the bred cow market that's really starting to heat up. And we'll talk about whether herd expansion is something the industry can even consider here in the next 6 months. Of course, I want to take a moment to thank a few of the sponsors of our report, Ag Risk Advisors. If you're watching this before December 1st, there's still time to enroll for pasture, rangeland, and forage insurance. After you get that policy in place, you can keep track of it with text alerts and other tools available at agriskadvisors.com. Well, the day after Thanksgiving was one of the toughest the cattle futures have seen all year. The feeders alone dropped by $7. Now that was due in large part to light trading volumes the day after the holiday. The fundamentals still tell us that this market should improve as we move through 2024 and supplies tighten, but since the highs reached in mid-September, feeders have dropped $50. That's $400 a head. Now, that amount of pressure has not been witnessed in the cash market, but nonetheless a tough run in the feeder futures. Well, the live cattle also saw pressure, drops of about $4 a day after Thanksgiving. Live cattle have done a little bit better than the feeders. They've dropped $20 in the last 2 months, so not as bad as feeders. Part of that pressure coming from weakness in the cash market and box beef just not holding up as well as we were hoping in the fall. So the tone of this market has turned a lot more bearish than we were expected. I think we can chalk a lot of that up to the cattle on feed report. Of course, in October, that bearish report came out and really started tanking the market. The November report showed total inventory in feed yards down 2% or up 2% from a year ago, rather. The placements figure, though, that's where the surprise was in October. That figure was forecast 6% higher for the November report, but actually came in only 4% better. So that was actually a little more friendly report than we were expecting, but still no support for the futures in that report at all. Well, it's easy to get lost in all the noise in the cattle market right now, but I'd say focus on the fundamentals and pull back and take that 30,000-foot view. Yes, we are seeing increasing numbers in feed yards. The placement figures have been higher than expected, but there's several factors affecting that, and it's not that we've got more cattle all of a sudden. One of the big factors is ongoing drought conditions. About a third, a little over that actually, of the cow herd is in a drought-affected region. So that's causing cattle to be marketed earlier, really pulling them forward. Also, we're closely watching feeder cattle imports from Mexico as the high U.S. prices and drought in Mexico has resulted in sharp increases in imports of feeder cattle in recent months, and a substantial portion of those increased feeder imports have likely moved directly into feedlots. Of course, the biggest factor, though, impacting these on-feed numbers are just the strong markets, encouraging producers to sell calves. We're not seeing significant heifer retention yet, so a lot of calves are going into feed yards as prices are about 30% above where they were a year ago. Maybe a little bit of pressure in the fall, but still some very strong prices. The increase in feedlot numbers is not due to more cattle like we mentioned. USDA estimated the 2023 calf crop down about 2% from last year, and it's been trending lower since 2018. We're talking, in the last 5 years, a drop of 2.5 million head. So what we're really looking at here is a changing in the timing of the marketing of these calves. Calves that are being marketed now are going to kind of front load those feedlot supplies and slaughter levels in early 2024, but increased placements now will result in reduced placements later, and in the next few months we could be talking about 1 million less head in feed yards. Despite the strength in calf prices that we're talking about right now, I think we're starting to see suggestions that herd expansion may be further off than we earlier expected. Now, I'm kind of talking anecdotally now here, but cow herd numbers are declining, and what we're really seeing is more open cows this year. Now, that's a result, I think, of challenges from grasshoppers and flies that really affected breedback. We've heard some horror stories of 40% open cows. Not going to say that's the trend for everywhere, but certainly more open cows than we were expecting. And so I think that suggests that we're going to see these cattle inventory numbers on January 31st come in tighter than expected and may slow the overall expansion. Of course, with the larger numbers of cows coming to town, we've seen a little bit of pressure on the market. Still talking some pretty good cow prices, really. Ranchers aren't disappointed in the size of the checks. We're talking a lot of the bigger cows, $80 to $95, lean cows, $68 to $78, and good demand for the 2-year-olds and young stock cows. They'd bring anywhere from $125 up to $194. So that the more contraction in the cow herd, we're thinking going to be partially driven by the number of open cows that we've got, but you also got to consider other factors, just like these high input costs. They need to rebuild some feed stocks still, and of course interest rates the highest in a generation rather. So all of that is putting pressure on ranchers, maybe not creating a huge desire to expand, at least not to the level that we saw 10 years ago in the previous cycle high. Some of the other factors that we have to consider are some ranchers may choose to exit the business with these high cattle prices. If they don't have a transition plan in place for the next generation, this may be that opportunity with these high prices. So we think that this cow herd could shrink past where it really should, and you could argue that it already has. That is going to support prices long term if supplies continue to tighten, and it's really going to put pressure on the feed yards and packers. Speaking of those feed yards, cash-fed cattle prices have dropped $200 a head in just the last month, $7 to $8 lower on the live sales, mostly coming in $175 to $178. And what we're seeing there is not only are the prices coming lower, but the cattle being marketed right now have higher break-evens. And so that's put the feed yards in a position where they're maybe looking at more like break-even prices than the $300 head profit they were talking just a month ago. Packers estimated to be losing about $70 a head right now, and those losses could get even wider in 2024. So the supply situation tells us that cattle prices should be increasing here over the next few years with just the tightening numbers that we're looking at, but demand is going to be the important thing to watch here. The choice box beef cutout has trended a little softer, still historically high, just under $3 a pound right now, but that demand is going to be the determining factor in how high prices can go. Well, wrapping up the report here, we want to look at some of our different auction markets and cattle and livestock sales across the region in the past month. We'll start out with the calf market, where prices have trended a little bit lower, but still some very strong levels here. 4-weight steers selling largely from $330 up all the way to $370. Your 5 to 5.5 weights doing pretty well over the last month, mostly $285 to $310. Upper 5 weights did meet more pressure from $265 to $285. 6-weight steers starting to do a little better, most of them from $245 up to $260. Wider spreads on the heifers, but I think it's fair to say some of the best prices we've seen for feeder heifers maybe ever. Now turning to the lamb market, prices well improved from where they were last year. We're talking about 40% higher on the lamb prices. 60 to 70 pound lambs selling largely from $223 to $248, 80 pound lambs $216 to $235, and the 90 to 110 pounders $195 to $214. The bull sales this fall have started off very strong. I think that's a reflection of these high calf prices. You know, calf prices up 30%. Of course, you'd expect to see the bull sales higher, and really ranchers are investing genetics, thinking of the future of their operation. As we look at some of these sales in the last month here, Redland Angus at Worland, they had their sale in Buffalo, and the average at $92.98, up 15% from a year ago. Green Mountain Angus averaged $78.50, with the average up 23%. And turning to look at the bred female market, the week of Thanksgiving, we saw a big test of it, and boy, these prices are definitely moving higher. Some strong sales. If you look at Torrington Livestock, we saw the average on bred heifers all the way up at $27.86. That was up 33% from last year. The 2 to 4-year-old cows averaging $28.15, up 73% on the average. Now, I wouldn't expect that trend to maintain, but we do think these cow values are likely to strengthen. If you move to the north at Lewistown Livestock, prices maybe not quite as strong, but still way above where we were a year ago. Bred heifers averaging $24.97, young to mid-age cows $23.22. We've got a lot of big bred cow sales coming up here over the next 2 months, so it's going to be an interesting market to watch. I would definitely look for it to move higher. Well, that's going to do it for this month's report. Thanks so much for joining us. Merry Christmas and happy holiday season to you and your family. We'll chat again here at the end of the year. From the Northern Ag Network, I'm Coulter Brown.